If we're right, this market is going to go from 2.2 million sales, that's units, in 2020, it might be 2.3, to 40 million in 2025. So all of these announcements have increased our confidence that the capital markets are going to finance this transition from internal combustion engine to electric. That's great. Who is going to be leading the charge, so to speak? We still think it is Tesla, certainly in the United States. Even in China, Tesla is the #1 brand.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. And you might be thinking, hey Stephen, something's changed. What's going on here? Is it a new haircut? Bingo, new haircut. Well spotted, guys. So in this video, I'm going to be reacting to some clips of Ark Invest Cathie Wood sharing her thoughts on Tesla, the electric vehicle market, short selling, and Bitcoin. So let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
I want to be on the right side of change. That's what ARK is all about. Do I like a two-sided market? I disagree. I agree with Elon Musk on almost everything, certainly in terms of technology. But on this point that short sellers are a negative for the market, and ARK, who were terrorized during Tesla's plunge during 2019, if you have the courage of your conviction, and our courage comes from research, back then, what did we do during that plunge when many speculators were saying they're going to run out of money? Our simple question was, how can that be? The markets have not shut down. And sure enough, they did an offering. Was it at a lower price than many of us would have liked? Sure, but it was small compared to the ones they've done recently. We bought all the way down. It was a gift for us.
Okay, there's a lot of stuff to discuss here. First of which, I'm a big fan of short sellers artificially suppressing the price of stocks that I believe are going to go to the moon, such as Tesla. In fact, I made a video on this channel sharing what I did in 2019 when the short sellers hammered Tesla's stock price into the ground. I liquidated almost every other asset that I owned, all of my stocks, scrounged up as much money as I possibly could, and drew on credit lines to buy the dip. And well, thanks to the short sellers, that worked out okay. So I can definitely see things from Ark Invest perspective. Again, I'm a big fan of getting stocks on a massive discount, regardless of the circumstances around that. However, if you put yourself in the shoes of Elon Musk, CEO of Tesla, when you had literally 3 years of relentless FUD, BS in the media, short sellers trying to kill your company, trying to cut you off from the capital markets, I can understand why you wouldn't be a huge fan of short selling. See, here's a really nuanced thing about shorts. Many short sellers are genuinely trying to provide a service to stock investors in the marketplace, warning them of potential issues, etc. with companies. However, the way that human beings have evolved, our brains pay far greater attention to danger, potential things that could kill us back in the day on the plains of Africa. Now that machinery, our brain actually pays the same level of attention to things like, oh my God, this company is going bankrupt, rather than, oh my God, this tiger's about to eat my fucking face. This allows short sellers to have a disproportionately leveraged impact on the stock price of a company they go after. For example, if a huge Tesla bull appears on CNBC and says the stock's going to the moon, they'll do 20 million units in 2030, the stock's barely going to move. People are like, oh yeah, cool, whatever. But if a short seller gets on CNBC and said there's fraud, there's corruption, there's issues, etc., people are far more likely to be worried about this because their brain's looking for problems instead of looking for a lion that's about to eat them for lunch. They're looking for a company that's going to go bankrupt. The same part of our brain is now focused on different issues. It can have a far greater impact on the stock price. This is the whole concept behind short and distort. If you go short a stock, get yourself into the mainstream finance media, you will generally speaking make an absolute shit ton of money. Whether or not your research is right, it doesn't matter. Just from the fear created by you saying something negative about this company, true or not.
If during our Tesla 2019 experience, if we didn't have the cacophony of investors, sell side, buy side, retail, institutionals, putting down Tesla, we wouldn't have gotten the opportunities to buy it that we did. And we wouldn't have understood how much those investors did not understand what was going to move the stock. That helped us. And if their voices are shut down, I think that will be doing a disservice to all investors, because I want to know, what are the arguments against this position? Clearly, we're missing something, but we weren't when it came to Tesla.
Another great point here from Cathie. Less eloquently, unless you're a moron, it's pretty important for you to be paying attention to both sides of the argument. Whether you're bullish on a company or bearish, you should always listen to what the other side has to say to check your thinking and reasoning. Do they have any points that make sense? Are they grounded in reality, or is it fantasy and absolute horseshit? And when I looked into the so-called research of some of the Tesla short sellers out there, I was only able to draw one of two conclusions. Either they're actually a moron, or they had nefarious motivations and didn't actually believe what they were saying, neither of which had any impact on my bullish thesis.
If we're right, this market is going to go from 2.2 million sales, that's units, in 2020, it might be 2.3, to 40 million in 2025. So all of these announcements have increased our confidence that the capital markets are going to finance this transition from internal combustion engine to electric. That's great. Who is going to be leading the charge, so to speak? We still think it is Tesla, certainly in the United States. Even in China, Tesla is the number one brand. Now, the smaller vehicles in China, there is a company, I've forgotten its name. It might be associated with SAIC and GM, by the way, that is pulling ahead, but that's not counted as a true electric vehicle. These are the ones that go 25 miles an hour, golf cart types of things.
For the record, I think Cathie is referring to the Wuling Mini EV, starting price just over $4,000. It's a tiny, low-range death machine on wheels. Not being a hater, but I mean, for that price point and that mass, if you hit something bigger than you're fucked. Hey, there's a marketplace for these vehicles, but again, this isn't really a competitor with, say, a Tesla Model 3, Model Y, etc., because they're not in the same league. If you want long range, if you want safety, if you want features, if you want functionality, if you want performance, if you want over-the-air updates, etc., you need a Tesla. This is great. These tiny city cars are going to serve a great need for many, many people who don't need a long-range vehicle, don't have a lot of money to spend, etc., or just have a tiny parking space because they live in a very expensive city. But it's fair enough to say that we can discount this as competing with Tesla. If, for example, next month there's more of these units sold than there are Model Ys or 3s in China, not a big deal. Tesla isn't getting their ass kicked because they're not in the same market.
So we think that China might hold the secret as to the next big winners. We know that NIO, we do not own NIO. It's a battery swapping company. So instead of charging, they swap batteries. That is going to win the day. We think that Xpeng, which we do not own, but which is emulating Tesla, might. We're seeing, and we do own in our more specialized strategies, BYD was a battery manufacturer to begin with, and Warren Buffett has owned for many years a piece of BYD. That has done very well. We own that. And then Geely, which bought Volvo, and I believe the chairman of Geely owns a position in Daimler. It is also doing a lot of interesting things in terms of partnering with various companies, including Baidu. So if I had to give you which of the Chinese names we have the highest conviction in, it's probably Baidu. And that had been a hard sell for me because their search business was falling apart. And it did seem to me, with more than 150 or 200 electric vehicle manufacturers, many being government subsidized, that there would be a bloodbath. And Baidu is The government has deemed it the autonomous platform for China.
Hearing the name Baidu pop up there was a little bit of a surprise, but if you can't read between the lines there, if the Chinese government wants Baidu to win, Baidu will win.
We weren't sure whether to believe that or not, or if it would get caught up in the carnage, but it does seem to be doing something very interesting. And there's also another company called AutoX. This is more, they're working with Dongfeng, which is mostly involved in the trucking space. But we did take note that AutoX has gotten approval from California to go fully autonomous there. I didn't know that until very recently, so that could be another one to watch.
And we're now going to hear Cathie Wood's thoughts around Bitcoin. And this is the perfect opportunity for me to address many of the comments and DMs I've been getting over the last year or so. Words to the effect of, hey dude, I can't believe you've never bought any Bitcoin. Why don't you research Bitcoin? Why haven't you looked into Bitcoin? Rah, 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 rah. Hate to rain on your parade, guys, but this guy was buying Bitcoin in 2013. In fact, in 2014, I had 141 Bitcoin in my possession. They'd still be in my possession if it was my choice, but unfortunately for me, they were involuntarily liberated from my control. So yeah, rip me and rip my Bitcoin bet. And I use the word bet, not investment. At that point in time, I thought I would bet around 15% of my net worth on this high risk, potentially high reward asset class. If it was up to me, I'd still own those 141 Bitcoin, but it wasn't up to me. If you guys would like to hear the full story about that, let me know in the comments below. I'll certainly share it with you. And just for fun, let's break out the world's smallest violin and see what those Bitcoin would be worth today if they were still in my possession. So 141 Bitcoins would be worth about $5.3 million today. Decent. Good thing I invested in Tesla and real estate and multiple businesses and didn't give up, didn't cry in the corner like a little bitch when I lost my Bitcoin.
I want to talk about crypto. We've got number 6 and 7, Bitcoin's fundamentals and Bitcoin preparing for institutions. So, you've got a lot of fans in the crypto space. I want to know what you think here. And of course, Bitcoin, some people think, look, it's already hit its highs for 2021, the high water mark of above 40,000. What's Ark's thinking here?
We do not agree with that. And what's been interesting this time around is if you look at Google search trends for Bitcoin or Bitcoin's price against the Bitcoin price itself, you'll find that there's not a lot of speculative activity by that measure. In fact, in 2017, they were 1 for 1 together, but it has been pretty quiescent until maybe very recently, but throughout last year. And so that gave us a lot of comfort. We believe that the institutional behavior and moves recently have been fascinating. We have been expecting institutions to start moving into Bitcoin and other crypto assets, but primarily Bitcoin, the most secure of the blockchains, because if you look at the correlation of Bitcoin's performance relative to any other asset class, it has the lowest correlation, meaning if you buy some Bitcoin, you will further diversify your portfolio and increase your returns with lower risk, right? So that's why institutions look for that low correlation. Bitcoin has it. And so that's clear. We have 10 years of history now. But what surprised me and us generally was to watch MicroStrategy, which has put all the cash on its balance sheet into Bitcoin, and even did another equity offering so it could put more cash on its balance sheet. And I think that's a little crazy because I think the regulators will have something to say about this in terms of what is this? Is this company the MicroStrategy technology company, or is it like an ETF? So we don't know about that. But then you saw Square put 1% of all of its assets in Bitcoin. And I think you're going to see more of that. We didn't expect that. What we did expect was, because of the low correlation of returns, institutional investors to move in. The most surprising one to me thus far has been MassMutual. It put $100 million into its general account. Now, its general account is enormous. So $100 million is something like 0.001. But what that move told us is Mass Mutual's very conservative and very highly regulated. And so it had to jump through many more regulatory hurdles than I thought would have been possible by now. So I think that is a seal of approval. And then, of course, you have the institutional infrastructure moving into place, whether it's with custody, and everyone knows a lot about Fidelity being out there in terms of wanting to custody Bitcoin in particular. You have the Intercontinental Exchange, and you've got the CME now with Bitcoin futures, one settling in kind, one settling in cash. And so we do believe that Bitcoin is getting ready for institutional. But when we actually think about this, is Bitcoin ready for institutions? Bitcoin is it's roughly a $600 billion market cap. So not even half the size of Apple or Amazon, right?
Yep.
Doesn't put it into perspective. And yet it is a very big idea. I think a much bigger idea than Apple or Amazon. It's the first truly global digital currency out there. And it is completely decentralized. There's no throat to choke. So unlike with Libra, you had Europe and the US and many countries saying, we'll never allow this. That's because there was one throat to choke. With Bitcoin, there's no throat to choke. And in fact, when China basically shut down the exchanges in China that dealt in crypto, especially Bitcoin, that activity just moved over to Japan, Thailand, and Korea, other countries that wanted to move ahead in this innovation space. They did not want to miss this next big thing.
Ark Invest clearly quite bullish on the long-term future of Bitcoin. As for me, I'm a little bit more skeptical and bearish over the long term. There's lots of uncertainty. I'm not going to go into all that stuff, but there's not enough visibility for me personally to feel comfortable that it's a great long-term investment. It may be a great bet, but as an investment, not for me. Now, that being said, as I mentioned earlier, if it was up to me, I still would own the Bitcoin that I purchased in 2013 and 14, but it wasn't up to me. However, over the short term, I'm very bullish on Bitcoin, much like Dave Lee on investing. And by the way, if you haven't subscribed to his channel, what are you doing with your life? Go subscribe now. Smartest dude on YouTube, bar none. Over the short term, I won't at all be surprised if we see Bitcoin 2x, 5x, 10x or more. Not a prediction, but if we see that outcome come to pass, I will not be surprised. However, I'm personally not investing in Bitcoin at this point in time. Maybe in the future I change my mind and go, you know what, you're such a moron, Stephen. You could have bought it 35K instead of 350K. What an idiot. But here's the deal. My approach to investing is to build up an extremely high level of conviction and look for outsized gains. I'm not looking for a double. I'm not even looking for a 10x. I'm looking for a 100x or more. I really want to make the most of my resources. Now, I'm not going to be right every time, but when I look at Bitcoin versus a company, Bitcoin has no CEO, no employees, no engineering talent, no technological lead, nothing, no track record of execution. So for me to develop a high enough level of conviction to have really high confidence that this is going to appreciate over time, I just don't see it. And again, I actually believe over the short term, Bitcoin is going to continue to appreciate. However, at the end of the day, it really boils down to this for me. I'm not able to develop a high enough level of conviction in Bitcoin because I don't have enough information and neither do you. It's not available. There's too much uncertainty and a lack of visibility over the future. Let's just imagine some crazy scenarios that could theoretically happen. What if governments globally decide to ban Bitcoin, make it illegal to transact in? What if they attempt to regulate? What if Elon Musk tomorrow smokes some DMT and then comes up with his own cryptocurrency that shits all over Bitcoin and starts pumping it extremely hard? Now, I'm not saying these are likely scenarios. What I'm trying to illustrate is a point. There's so many unknowns that could occur in the future that for me, I'd much rather lie in wait, put my capital where I think I'll get a reasonable return over the short term without enormous risk, and wait till I find those 100x opportunities that I develop an extremely high level of conviction in, and then I'm happy to go all in. Hope you guys have enjoyed this video. Let me know in the comments below, do you own any cryptocurrency? What do you own and how much? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.